Are you an entrepreneur looking for the best investment methods to make money in 2023 and 2024? Investing can be complex, especially for entrepreneurs balancing risks and rewards. We've researched and crafted a list of 7 promising investment strategies, perfect for the entrepreneurial spirit. These methods span various sectors from cryptocurrencies to real estate, startups to the stock market. As an entrepreneur, investing more than just money, it's about dreams, hard work, and the future. Making informed decisions can enhance your wealth and secure your financial future. Let's dive into these top 7 investment methods that could yield significant returns in 2023 and 2024. First on the list is the investment in cryptocurrency. Now, cryptocurrency is not your typical investment avenue. It's a digital or virtual form of currency that uses cryptography for security. Its decentralized nature sets it apart from traditional currencies, making it an enticing investment opportunity for many. However, it's not all sunshine and rainbows. Cryptocurrency is renowned for its volatility. The value of a cryptocurrency can skyrocket in a day and plummet just as quickly. Sounds like a wild ride, right? Well, it certainly can be. But with this volatility comes the potential for high returns. For instance, Bitcoin, the first and most well-known cryptocurrency, saw an astronomical rise in value in just a few years. But remember, it has also experienced significant dips. This is where careful study and risk management come into play. It's crucial to do your homework before diving headfirst into the world of cryptocurrency. Understand the market trends, stay updated with the latest news, and most importantly, only invest what you can afford to lose. Remember, high reward often comes with high risk. Cryptocurrency, through platforms like Bitcoin, Ethereum, and more, has opened up a new frontier in the investment world. It's a high-stakes game, but for those who play their cards right, it can be a lucrative endeavor. Cryptocurrency, though a high-risk investment, can provide substantial returns if done right. Next, we delve into the world of real estate investment. This time-tested approach to wealth building has a lot going for it. Firstly, there's the benefit of rental income. Owning a property and leasing it out to tenants can create a steady stream of income. This can be particularly appealing for entrepreneurs looking for a more predictable return on investment. Secondly, real estate often appreciates in value over time. That house or apartment you buy today could be worth significantly more in a few years. This potential for capital growth can make real estate an attractive option for those with a long-term investment horizon. Thirdly, let's not forget about the tax advantages. In many jurisdictions, expenses related to owning and managing a rental property can be tax deductible. This includes things like mortgage interest, property taxes, and maintenance costs. However, it's not all sunshine and rainbows. Real estate investment also carries its share of risks. Property management can be a demanding task requiring time, effort, and sometimes patience. Market fluctuations can impact property values, and there's always the risk of vacancy or non-payment of rent. So, it's essential to do your due diligence before diving in. Consider working with a knowledgeable real estate professional who can guide you through the process and help you avoid potential pitfalls. Real estate investment, with its potential for steady income and appreciation, remains a viable investment option. It's a path that requires careful planning and consideration, but for many, the rewards can be well worth the effort. Third on our list is the stock market investment. Now, we all know the stock market can be a roller coaster ride of highs and lows. But with potential for high returns, it's a ride worth considering. What's the secret to navigating this wild ride? Well, it boils down to 3 key elements: research, diversification, and a long-term investment strategy. First, research is crucial. You must understand the companies you're investing in, their industries, and the overall market trends. This knowledge will help guide your investment decisions. Second, diversification is your safety net. By spreading your investments across various sectors, you reduce the risk of losing all your money if a single industry or company goes under. Lastly, a long-term investment strategy is vital. The stock market is not a get-rich-quick scheme. It requires patience and a steady hand, as the most significant gains often come from holding on to stocks over a long period. Though the stock market can be unpredictable, it offers immense potential for growth over the long term. Fourth on our list is peer-to-peer lending. Now this is an interesting one. Picture this. You're not just a lender, but you're able to play the bank. Peer-to-peer lending, also known as P2P lending, is a system where you can lend your money directly to individuals or small businesses in need. The beauty of it? you can potentially earn higher interest rates compared to traditional savings and investment products. Now, before you jump in, let's talk about the other side of the coin. There are risks involved. The big one, default. That's when the borrower fails to pay back the loan. Remember, unlike a bank, you don't have the same level of protection, so it's important to diversify your lending to minimize potential losses. But don't let that scare you off. Peer-to-peer lending platforms have systems in place to mitigate these risks and protect lenders. If managed properly, peer-to-peer lending can be a great way to earn regular income. Next, we explore the realm of startup investments. This is an investment avenue that's not only financially promising but also personally fulfilling. By investing in startups, you're not just positioning yourself for potential high returns, you're also playing a crucial role in helping new businesses grow and innovate. Imagine being part of the next big thing. The next company that changes the way we live, work, or play. That's the opportunity that investing in startups offers. However, it's important to note that this is not a venture for the faint-hearted. The startup world is riddled with risks, the most prominent of which is the high failure rate. According to various studies, 9 out of every 10 startups fail. That's a staggering number, and it should make any would-be investor pause. But it's crucial to remember that the one startup that succeeds could potentially bring returns that far outweigh the losses from the others that didn't make it. The key to successful startup investing lies in diligent research, understanding the industry, and diversifying your portfolio. It's about not putting all your eggs in one basket, but spreading them across various promising startups. Investing in startups can be risky, but the potential for high returns and the thrill of nurturing new businesses make it an exciting option. It's about embracing the risk, and at the same time, being part of the journey of innovation and growth. Sixth on our list are ETFs and mutual funds. These are two investment strategies that are often mentioned in the same breath, yet they each offer their unique advantages. Exchange-traded funds, or ETFs, are a type of investment fund that can be bought and sold on a securities exchange, just like stocks. One of the key advantages of ETFs is that they offer a high level of diversification. When you buy shares in an ETF, you're essentially buying a small piece of a large and diverse portfolio of assets. This can help spread out your risk and potentially increase your chances of earning a return. On the other hand, mutual funds are investment vehicles managed by professionals. They pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. The benefit here is the professional management. These professionals have the skills, knowledge, and resources to make informed investment decisions on your behalf. However, there are potential drawbacks to consider. Both ETFs and mutual funds come with fees that can eat into your returns. Plus, because you're not making the individual investment decisions, you might feel like you have less control over your investment. Despite these drawbacks, with the right choices, ETFs and mutual funds can provide a balance of risk and reward. They allow you to spread your investments across a wide range of assets and industries. With the right choices, ETFs and mutual funds can be a smart way to grow your wealth. Finally, we wrap up with a quick recap. We've journeyed through 7 potent investment methods, each with its unique appeal and potential. We delved into the dynamic world of cryptocurrency, a frontier of digital assets that's revolutionizing financial transactions. We explored the sturdy realm of real estate, a tangible asset that often appreciates in value over time. We also dissected the stock market, a classic avenue for wealth creation, and touched on peer-to-peer lending, a modern spin on traditional lending that can yield attractive returns. We ventured into the exciting sphere of startup investment, where high risk can mean high reward. And lastly, we looked at ETFs and mutual funds, the diversified portfolios that can spread your risk and maximize your returns. As you step into the financial future, remember to conduct thorough research, consider your risk tolerance, and make informed decisions. Remember, the best investment is the one that aligns with your financial goals and risk tolerance. Well, that's it. We really appreciate you taking the time to watch these gems for success. But before you go, please like this video and share it with your friends on social media. If you're new here, don't forget to subscribe so you won't miss out on other engaging videos like this one. Thank you for your support.